As the latest inflation data has been released, the market is calling more strongly than ever for the Reserve Bank of Australia to cut interest rates. Many commercial banks have jumped the gun, lowering rates on loan and deposit products to prepare for the market impacts. If you haven't made the necessary preparations and only start to plan after the RBA officially cuts rates, it could already be too late. Whether you live in Australia or own Australian assets, the RBA's rate trajectory will determine your wealth outlook over the next 1 to 2 years. From the Australian federal election to the US pausing rate cuts and ongoing tariff battles, the market has introduced several uncertainties, each capable of directly affecting your wealth. One misstep could lead to a reduction in asset value. In this episode, we'll discuss how to respond to these uncertainties, adjust strategies in a timely manner, and avoid financial risks. Hi, I'm Alex. Welcome to Oz Property Strategy, where I share information about real estate investment, economic trends, and wealth creation. If you like this video, smash the subscribe button and turn on the notification bell to watch new weekly videos. Without further ado, let's get into it. Last week, the Australian Bureau of Statistics released the latest inflation figures. In December 2024, Australia's core inflation stood at 2.7% year-on-year, with the trimmed mean CPI also at 2.7%, extending its downward trend and now landing in the Reserve Bank's 2 to 3% target range. For the fourth quarter of 2024, core inflation was 2.4%, while the trimmed mean CPI reached 3.2%, both showing positive momentum. With inflation performing this well, it seems people truly have no money left in their pocket. Otherwise, why would they have cut back so much on spending? Since the Reserve Bank of Australia's last interest rate hike in 2023, this high rate environment has lasted for 15 months, but it still hasn't managed to stop spending. People still have a decent amount of saving left. Nominal wages are rising while real wages are declining, and the unemployment rate has barely shifted from 3.9% to 4%. Australia has effectively entered a phase where everyone is getting poorer, but everyone remains employed. A very peculiar economic phenomenon, one that practically only appears when the Labor Party is in power. Meanwhile, housing prices across Australia soared continuously, only to record their first negative growth in December 2024. During this period, property in major cities became too expensive. People relocated to small and medium-sized cities where housing was relatively cheaper. Even though interest rates remained high, this movement still pushed up house prices in those smaller cities. Financial market expectations for interest rates are most authentic because they reflect the real money people are willing to bet in their predictions. After the ABS released its latest inflation report on 20th of January, the market's expected probability of an RBA rate cut on 18th of February surged from 84% to 95%, essentially confirming an 18th February rate cut. So once rates start coming down, how will that affect property investment and your wealth? Number 1, the housing market. Melbourne's house prices have been on a continuous decline. Many investors who took out loans from non-bank financial institutions like fund companies offering higher interest rates can no longer bear the pressure. Meanwhile, in certain suburbs of Sydney, the drop in home prices has been mild. Lowering the cost of loan interest provides strong support for properties and buyers who are extremely price sensitive. In other words, if the rate cut isn't very large, it benefits entry-level buyers and entry-level properties, offering stronger price support than for mid to high-end properties. Research by the RBA shows that if interest rates go down by 1% and remain at that level for 3 years, assuming the unemployment rate does not rise, real housing prices, excluding inflation, would increase by 8%. Including inflation, nominal house prices should see at least a 15% increase. If you own a property and plan to sell upon hearing about interest rate cuts, you might think lower rates will push prices up, so if I wait a bit, I can sell at a higher price. If that's your mindset, don't get overly excited just yet. Even with lower mortgage rates, the national median house price remains at $815,000, which is still beyond many families' borrowing capacity. My guess is that Australia's housing market will first weaken at the start of 2025 and then strengthen. A massive surge in prices doesn't seem likely. Under the Oz Property Strategies investment framework, there are only 6 situations in which you should sell a property. Check them against your own circumstances. If you don't fall under these 6 points, we generally don't recommend selling. Number 1, you urgently need cash and have no other way to obtain it. Number 2, you have another way to put your capital to more efficient use. Number 3, your loan amount is too high, increasing the pressure of holding the property. Number 4, it no longer aligns with your long-term investment goals. Number 5, your investments are overly concentrated and needed risk diversification. Number 6, when there are shifts in the broader economic environment in which real estate is no longer a good investment option. If you want to buy a home to live in, you can buy it anytime. You're in it for a long term. So short-term ups and downs don't really matter as long as the market is going up in the long term. Just make sure you're not buying in an area with a pile of identical apartments and an endless supply. For those planning to purchase an investment property this year, you really need to be careful. The days of blindly hopping on the property trend are over. You need a complete approach, including wealth positioning, goal setting, market research, property selection, and a whole series of follow-up steps for management, accounting, and legal solutions. Anyone who can handle all these by themselves is both highly capable and has plenty of time. Otherwise, you could consider Aus Property Strategies service, the Vision membership. When buying a home, you might want to avoid locking in a fixed-rate loan right away. Wait until the central bank cuts rates a few times and then stops before deciding to fix your interest rate. Number 2, the Australian dollar. Right now, the Australian dollar is almost at its lowest point against the US dollar. This means any product and service priced with Australian dollar is cheaper to the US buyers, including Australian property and stock. The USD rose after Trump announced tariffs against Canada, Mexico, and China. Once the RBA lowers rates, the US dollar will be even stronger. So if you want to buy anything in the US, now is the right time. For people from the States buying Australian properties and shares, you might want to wait a bit. Number 3, fixed income. If you have fixed-term deposits, a rate cut isn't good news. As the market's expectations for lower rates grow, by the end of 2024, virtually all 2 to 5 year term deposits offering over 5% return have disappeared. One of the big 4 banks currently offers an 8-month term deposit at 4.75% per annum, which is relatively high. If you've been parking money in your share trading account to score higher returns, those deals will go soon. So if you like the safety of savings, act quickly and look for products that suit your needs. Number 4, mortgage. If you want to buy a property now, putting it on a fixed term is not a good idea. As the RBA cuts rates, the mortgage rates will go even lower. So a variable is a better choice for now. When the RBA cuts a few times and pauses the rates, put the mortgage on a fixed term. A couple of days ago, one of our strategists brought 2 clients interested in joining the Vision membership to my office. Since I was around, I joined the meeting and stayed a bit. It became clear that the new immigrants to Australia are incredibly vulnerable when it comes to buying properties or investing, easily falling for scams, and this issue seems almost unsolvable. They recently got their PR through the investment migration channel. To meet the requirements set by the state government, they have to invest a large sum of money, maybe buy 1 or 2 properties, and must finalize everything within a few months. Somehow words got around, and suddenly a bunch of agents started contacting them non-stop, taking them to inspect numerous apartments. When I asked for details, I found out that all the locations were places where prices either rose very slowly or hadn't risen in years. Areas packed with apartments. Our meeting was called a discovery session, and it was for prospective Vision members to discuss the membership with us. It's not supposed to be a consultation. But hearing what they'd gone through, I couldn't keep silent. I told them, even if you don't join the membership, I need to explain what's exactly going on. So I filled them in on Australian mortgage rates, property basics, various investment channels, transaction costs, and holding costs. Those agents hadn't mentioned any of that, which shocked me, though it's not surprising. An agent's job is to sell properties. Sharing useful knowledge is optional, while closing the sale and earning a commission is the main focus. Whether the client makes money isn't really their concern. These clients originally planned to buy an apartment recommended by someone they knew, but once they learned about the cost of loans, transaction fees, and the sluggish growth and low rental potential of many apartments, they chose to just park their cash in the bank for a few months, wait until they fulfill the state government's sponsorship requirements, and then look for investment properties in various Australian cities. I joked, even without joining our membership, I've probably saved you $100,000. You've probably spotted the core issue already. The people you meet when you arrive in Australia directly determine your source of information and your understanding of the market. Most of that information tends to be one-sided. The result is something that benefits the information provider, and whether it helps you is a question. New arrivals either don't know about this trap or, if they do, have no idea how to escape it. Honestly, it comes down to luck. If they can just follow the content that Aus Property Strategy puts out, free lessons and live streams, you won't fall into these traps. That's exactly our mission at Aus Property Strategy's media channels. Filter out market noise, build a psychological firewall, see true nature of Australian real estate investment, and ensure no more misinformation in the Australian property sector. If you made it this far, please give me a thumbs up, subscribe, and share this with your friends. Turn on the notification bell to watch new weekly videos, and have a good one. Bye.